Investing in a passive product or an ETF does not mean that you are removing market risk. Whatever is happening on exchange is pure supply and demand, and AMC cannot intervene. I think time for ESG will come again.
What ETF category will see the biggest growth in India by 2027?
If I have to take one interesting name, I think
Hi, I'm Renuka Verma from Mirae Asset Sharekhan. Welcome to part 2. We continue with Mr. Siddharth Srivastava. So how do you decide on new ETF launches such as small cap equal weighted indices?
Yeah. So the answer is pretty simple. I'm a product manufacturer, right? And my job is to provide good ideas, good product which have longevity. And when we think of a theme or a strategy which has longevity, the next step is to create or think of a method which will create true to the label portfolio, and then do backtesting, etc. Think of how that particular portfolio, each stock should have what weight, how the weight should change, how many times it should be rebalanced, etc. So all those goes into designing of a product. So for example, let's say when we were thinking of an EV based product, electric vehicle based product, we thought of why just include automobile companies. Battery manufacturers are equally important. Chemical players who will provide the raw materials for battery manufacturing are also important. The companies which are providing tech for ADAS system is also important. In our EV based product, instead of picking just automobiles, we decided to pick companies from the entire value chain, right? Because we believe that when a person is investing into electric vehicles theme, he wants exposure to the entire value chain, right? Then idea came that what should be the stock weight, and we obviously look at that there should be a reasonable representation of all companies and each component of the value chain. It shouldn't happen that chemical companies or battery manufacturers end up getting 60-70% of the weightage, right? It's still an automobile company driven theme. So all those nuances gets checked in our portfolio creation, in backtesting, etc. And then once we are convinced after multiple iteration that this is how we want to approach a theme or a strategy, etc., we typically the index provider typically launch that index, and then we file for an ETF or the index fund. The important thing is that obviously not all product is suitable for everyone. That goes without saying. But there are so many different type of necessities, need, etc., risk profile, investment objectives, that perhaps I might not like electric vehicle theme. My preference can be, let's say, a manufacturing theme or a defense theme. Your view can be completely different, right? So as product manufacturers, our job is to obviously identify those theme strategies which have longevity, and then try to create the best portfolio based on a rule-based method which can track that theme or track that strategy in the best manner possible.
Great. With small cap ETF surging early 2026 while big tech stalls, what's driving this rotation, and is it sustainable?
See, investors always look for opportunities and they chase returns also. If I am looking right now, most of the money is coming in gold and silver ETFs because gold and silver has done so well. In fact, in January, gold, silver got more money than equities, right? And that was discussed and talked about quite a lot. Before that, if I go back one and a half year, it was smart beta which was getting money across the spectrum, right? Because smart beta products were doing well. Momentum, alpha based products were giving phenomenal returns, right? Before that, we had FANG, a lot of people were running after investment in US markets, etc. also. So the point is that in terms of net flows or flows, we will see whichever segment is doing well. Recently we see inflows there, and that's the truth. So it is still gold and silver right now. A while back it was smart beta, along with international products as well, and I think this rotation will keep on happening. If we see that in last 1.5 2 years, small cap has not given any return, and we see that earnings earnings are coming back, and there is geopolitical tensions goes down, perhaps we'll see inflows in small cap funds also on the passive side in coming years.
So global ETF assets are projected to exceed 20 trillion by 2026. How is India positioned in active ESG or thematic ETFs?
So in India also we have seen significant rise in passive AUM. ETF alone is right now, this is Jan ending data, around 12 lakh crores, 11.8 to be exact. And if I add index also, that becomes more than 15 lakh crores. So passive industry as a percentage of AUM is now more than 15%. And this was, I think, around 10 lakh crores in December ending 2023, the overall passive industry. So you see how significantly we have grown in just 1 year plus. And like I mentioned, that what I believe is that it's not just basic products like Nifty 50 gold and silver which is attracting people to passive industry. It's also a lot of these innovative products which are attracting people, because people like new ideas, and we have seen tractions in thematic and smart beta products. When it comes to active ETF, those are not allowed by SEBI in local jurisdiction, so I don't think there'll be any active ETF in India till it is allowed by SEBI. Interestingly, it is allowed in GIFT jurisdiction. When it comes to ESG, ESG has taken a back burner globally also, because in recent times non-ESG ideas or segments which are typically penalized by ESG investing have done well. So you have seen a significant amount of money being made by commodities, metals, etc., and these are not typically part of an ESG portfolio. Defense have done so well. So I think time for ESG will come again. People will start appreciating and probably comparing ESG within a particular segment rather than looking to pick only segments which are good on ESG. So what I'm trying to say is that we have a sector leader ETF which does not penalize any sector, but within sector picks out the best ESG performing company. I think probably that is the way to go, instead of, let's say, excluding oil and gas completely or metals completely. So I think ESG will pick up, but it will take some time. What I've seen is that post-COVID, people have started liking riskier investments more. They are keen on investing in something. They're okay with risk if it has potential to generate higher returns. So from a investment behavior point of view, I think we have gone away from investment in ESG type of schemes, which are, let's say, more risk averse, and people are liking volatility more.
Global ETF in India often to trade at premium. Why does this persist? And how can AMC like yours manage bid-ask spread close to INAV?
That's a great question, and this question we have been getting for past several years. Actually, thing is that there's a limit which is specified by SEBI for an overall industry, which is $7 billion of investments in overseas market. This limit was reached by offshore funds which are managed by AMCs, and since quite a while we are not allowed to invest afresh in offshore securities. Because we can't do that, we are not able to create fresh ETF units. So whatever is happening on exchange is pure supply and demand, and AMC cannot intervene. So if my FANG ETF is trading at 15-20% premium, I cannot go and create fresh unit for my market maker who can go on the exchange and provide new units in order to bring down the price by providing sufficient liquidity. So my market maker is not able to provide fresh units, hence liquidity, because I cannot create new units for them, because I'm not allowed by SEBI, or industry is not allowed by SEBI to do that. So it's purely a case of supply and demand. Since FANG ETF, Hang Seng Tech ETF has done well in recent times, there's a lot of interest from investors, and that is why it is trading at this significant premium, and it will continue to do so till limits are revised by SEBI, or we get so much redemption in these funds that a room is created and I can start taking fresh money from investors till that room exists. So it is out of our hands, sadly. So anyone who is buying any international ETF, do check INAV, and if you invest knowing that you might be paying a significant premium on that ETF, and if that premium goes away, that is ultimately a loss for you.
Okay. What ETF category will see the biggest growth in India by 2027? For example, fixed income, commodity, equity.
Oh, that's a tough question. If I have to go by current, I think I believe that gold and silver will continue to get significant money. The reason being, SGPs are also now not coming, and people are now very well aware how ETFs work. So we'll keep on seeing good money in gold and silver. If I have to take one interesting name, I think hybrid funds on passive side will also get money in next 1.5-2 years. So very soon we'll be seeing hybrid funds on the ETF side, on the index fund side. I think though these two new categories will surprise us. So fingers crossed. I hope that apart from gold and silver, I also see some new category getting money in ETF, because for ETF industry to grow, we have to see healthy inflows in more categories. Use of ETFs cross investors' portfolios. I hope I see net flows which is much more diverse in multiple categories.
So, what's your one tip for our investors in today's market situation?
I have a very boring tip, but I think I have found it to be the most useful, is to focus on creating a robust portfolio. Having a good portfolio allocation is key. For example, I am a very strong advocate of international investing. So if I look at any portfolio, you should have around 20% or 25% of international exposure, around 10% of exposure in precious metals, and then on the domestic equity side, if you have managed your allocation well, diversified in a manner which suits your investment objective and risk profile, you will do well from an investment point of view, because it is very hard to predict what is going to work in next 1-2 years. Who predicted rise in gold and silver ETFs the way they have, right? We were all positive on gold and silver, but did anyone predict that within 1 year we are going to see these levels? Who predicted that FANG ETF will go so high and we'll see $4 trillion market cap companies? And who predicted that Momentum will be the best performing fund 2-3 years back? So I think pick out funds, create a good portfolio. It sounds boring, and if you want some interest, keep aside 5-10% of your portfolio for tactical allocations, and you can pick ETFs and use market volatility and opportunities to get good returns from tactical allocation.
Thank you so much, Mr. Srivastava. It was really well explained, all the question you have explained really nicely, and some points were clear for me also. So thanks.
Thank you so much for having me here.
Mutual fund investments are subject to market risk. Read all scheme and related documents carefully before investing.